How the frig is SPX up so high when so much risk from the debt ceiling impasse, horrible fundamentals, stats, etc.? Okay, so you're long, Hamburger Helper. You're a big long fund, right? BlackRock, Vanguard, Schwab, Fidelity. You just own a bunch of shit, right? What do you do with those investments while you're holding them? Hear me out. This is going somewhere. Sell CCs. Okay, yeah. What else? Loan shares. Very good. Okay, now say tail risk in the market is increasing, and you fear the future potential valuation of those long holdings. What would be your first step to risking off from those positions? Boom. Very good, Jason Bowers. Hedge them with zero DTEs? Yes, absolutely. Well, you also have to buy back your covered calls. Don't forget. Well, first, like let's say you've sold a lot of calls. You're very confident your positions weren't going up, but now you're afraid your positions are going to drop rapidly. But you've sold all these calls. Let's just say on SPX, for example. So you've sold calls at 41.40, 41.50, 41.60, 41.70, and so on. Your first step is to buy, and we're trading at 41.30. I'll try to make this relevant. So your first step is you're gonna buy calls because you got a big position you need to move, right? And it's definitely gonna affect the market. So you buy calls. You don't need a lot of theta because you only need them for like a day or two. So you buy calls and then you close all your CSP or CCs, right? And that's going to force the market maker to do what? Come on, just anybody, shout it out. You don't need to raise your hand. The market maker's already hedged, actually. Very good, P shorts. Deleverage. So the market maker is going to start. And how does a market maker hedge sold calls? By shorting, right? So the market maker hedges sold calls by shorting. And so in the act of deleveraging, the market maker would then buy, right? They would go long. Positive delta. Let's not try to think of it so much as buy sell. Think of it as how they need to delta hedge this, right? Positive, negative. So now the market maker is going to buy, right? Because you've closed this massive position of sold calls. The market maker is going to buy back their shorts. And then what happens when the market maker buys back all their shorts? The market goes up, right? They drive the index higher because they're buying what? What do they use? Come on. What's the hedge there? Futures, you got it, right? And then what have they done? They've bought all those futures into your giant pile of calls that you bought, your big fat hedge, and then you can close that hedge. Then you can sell. Are you going to clip this? Absolutely not. All right, fine, I'll clip it.